Hi, I'm Tim Sustak, Chief Credit Officer with Viso Financial, and this is the economic update for October 2018. Today, we'll take a look at the recent employment report and then look at what's been happening with interest rates. So, the recent employment report had a pretty big headline with a historically low unemployment rate. But when we look a bit deeper, the report was somewhat mixed. Overall, though, it seems to be pointing towards more of the same steady growth we've been seeing from a labor market that has been a bright spot in the economic picture for some time. The big news in the report was the unemployment rate, which came in at 3.7% for September, a 49-year low. Payroll numbers were a bit disappointing, adding just 134,000 jobs when expectations were around 180,000. However, the August number was revised higher by 69,000 jobs, which eased some of the sting from September. Despite an economy that keeps adding jobs and is likely at full employment or beyond, wage pressures just remain steady, with average hourly earnings on an annual basis rising 2.8%, falling just a bit from the prior months reading at 2.9%. All of this seems to be supportive of an economy that continues to grow at a reasonable pace, and is supportive of the Fed's plan to keep raising rates on a slow and steady trajectory. I'll look at the rate picture after the break. Welcome back. So, what's the latest on interest rates? Well, it's a bit more exciting than it has been for a while. The 10-year Treasury is back in the low 320s, which it has not seen since 2011, and is being driven by strong economic data, as well as reassurance from the Fed that it plans to keep moving short-term rates higher. The curve is still flat, about 35 basis points between the 2 and 10-year Treasury as of the making of this video. Though the Fed controls short-term rates and the market controls long-term rates, the market certainly listened to the Fed for guidance on where the economy currently stands and where it's going. In an interview last week with PBS, Fed Chairman Powell indicated that U.S. monetary policy is probably a long way from neutral at this point. Neutral meaning a level that neither helps nor hurts economic growth. This sends a message to the markets that economic growth is strong and gives the Fed ability to keep moving rates higher for some time. The Fed's current median estimate for the neutral rate is somewhere in the 3% range, though the range of estimates varies by about 1%. Regardless of where neutral actually lands, the key message is that as of now, we should continue to plan for slow and steady rate increases from the Fed for the foreseeable future. The markets are now pricing in about a 77% chance of another 25 basis point increase in December, and the chance of that seems to keep getting better the closer we get. Thanks for watching the economic update for October 2018. Here are this month's release dates for some of the more important economic statistics. We'll see you again in November for another look at the economy, and as always, thanks for watching.